Let me be very clear from the start. People keep asking, how high can XRP go this year? That question tells me most people are still looking at price when they should be looking at pressure. Markets don't move because of hope. They move because systems break or get forced to evolve. Here's the part most people miss. When systems fail, they don't fail loudly first. They fail quietly. The first sign is always a gap between what exists on paper and what you can actually touch. That's what's happening with silver right now. On a screen, everything looks fine, but try to source real size. Try to move physical metal at scale. Suddenly, the math changes. And here's the key. When that gap stays open, it means arbitrage can't close it. Not because traders are lazy, but because access has become conditional. That's not a pricing issue. That's a system signaling stress. And right now, pressure is building across commodities, energy, and money itself. This is not random. This is not sudden. And Venezuela didn't come out of nowhere. I've been long XRP for years, and I'll say this plainly. XRP is not designed for retail speculation. It's designed for institutional settlement. That's why it looks undervalued. That's why it feels suppressed. That's why price action frustrates people. You don't build global financial plumbing for day traders. You build it for governments, banks, and cross-border settlement. And that only matters when pressure forces adoption. XRP doesn't move when everything is calm. It moves when the system needs it. And we are moving into that environment. Let's get something straight. Venezuela's leadership has been disputed for years across multiple administrations. Sanctions didn't start yesterday. The difference now is enforcement. Enforcement changes everything, especially when the country involved sits on massive oil reserves, gold, silver. When enforcement tightens around resources, markets don't wait for headlines. They adjust quietly and early. That's what you're seeing right now. Silver is currently being priced two different ways. Let me tell you how pressure really shows up. It doesn't show up as a crash. It shows up as urgency. When banks pull short-term liquidity earlier than they should, it means they don't trust time anymore. They're not preparing for growth. They're preparing for friction. This is what happens right before systems tighten. Funding gets front-loaded. Margins get adjusted. Volatility increases without a headline. That's not panic. That's positioning. By the time retail notices, the professionals already moved. Paper silver, futures, screens, COMEX. Physical silver, what you can actually source and take delivery of. Under normal conditions. That gap closes fast, but these are not normal conditions. When physical silver trades meaningfully higher than paper silver, the problem isn't price, it's discovery and access. That gap staying open tells you delivery is harder, size matters, trust is thinning. This is what stress looks like before panic. At the same time, banks tapped record short-term liquidity through Fed repo facilities. Margin requirements on silver were adjusted, volatility increased. None of this happens without pressure. Markets don't break first. They strain first. And historically, stress always shows up as a gap between claims and control before it becomes obvious. Oil isn't important because it trades. Everything changes when energy stops being assumed. As long as oil flows freely, money feels free too. Trade looks smooth. Currencies behave. But the moment energy access becomes political, who can buy, who can ship, who can insure, energy stops being a commodity. It becomes leverage, and leverage rewrites the rules of money. That's when efficiency no longer matters. Reliability does. That's when settlement speed matters more than narratives. That's when systems designed for perfect conditions break, and systems designed for stress take over. Oil matters because goods don't move without it. Factories don't run without it. Economies don't function without it. When access to oil becomes conditional, who can buy, who can ship, who can insure, who can settle, energy stops being just a commodity. It becomes leverage. And when energy becomes leverage, currency behavior changes. Money still moves, but not freely. Efficiency gives way to reliability. Trust gets priced in. That's the environment we're entering. Here's what most people miss. It doesn't feel like we're watching problems happen and scrambling for solutions. It feels like the solutions already exist, and certain events are making them unavoidable. Systems don't change until pressure forces them to. That's why the rails were laid years ago. The technology existed long before urgency. Adoption waits for necessity. The question isn't what solution comes next. The question is, what has to break or tighten for the existing solution to finally be used? This is the part where most people get it wrong. They look at all of this and say, nothing's happening. Prices are flat. Volatility looks contained. Headlines feel repetitive. And that's exactly the trap. Because real transitions don't start with fireworks. They start with fatigue. Markets go quiet when positioning is happening. They go boring when decisions have already been made. This is the phase where weak hands leave because they're tired of waiting, while strong hands are quietly building exposure. That's why the most important moves never feel exciting in real time. By the time it looks obvious, you're not early. You're exit liquidity. When trade is smooth and trust is high, how money moves doesn't matter. But when pressure builds, dependencies are exposed, settlement slows, friction becomes visible. That's when tools designed to reduce complexity stand out. XRP isn't interesting in perfect conditions. It exists for imperfect ones, for environments where energy access matters. Trade carries conditions. Value must move across borders without renegotiation. Trust can't be reestablished every time. That's the environment forming now. Most people aren't grounded because they're watching price. Cheap price is not low value, especially not in suppressed systems. The XRP isn't undervalued by accident. It's undervalued by design until pressure flips the switch. And no, this doesn't happen without events. It happens when multiple stress points collide. That's how systems reset. I'm not selling in suppressed markets. I'm patient. I stay liquid. I place limit orders. I expect volatility, including black swan events. Because black swans don't announce themselves. They arrive when you're least prepared. That's why I stay ready. The train is already at the station. The rails have been laid. We're not waiting on innovation. We're waiting on necessity. Watch commodities. Watch energy. Watch liquidity. And stop asking how high something can go. Start asking what kind of environment makes it inevitable. Stay sharp. Stay disciplined. Stay wealthy. I'll see you in the next one.